Hi, good day, my dear students. This is our week 5 of second quarter in General Mathematics. So for this week, we're going to discuss stocks and bonds with 3 topics. The first one is illustrates stocks and bonds, then distinguishes between stocks and bonds, and the last one is the market indices for stocks and bonds. So this is our lesson 7 for week 5. So in this lesson, you will learn the different markets for stocks and bonds to help you earn money by saving some money for future use. So our learning competency, the learners are able to illustrate and distinguishes between stocks and bonds and describe the different markets for stocks and bonds. Do you want to be a part owner of these big companies? Or is it possible for us to be a part owner of these big companies? Yes, this is possible by buying stocks. So what is an stocks? Stocks is the share in the ownership of a company. So if you buy stocks, you are given a stock certificate that certifies that you own a share for that company. Some corporations may raise money for their expansion by issuing stocks. And owners of stocks may be considered as part owners of the company. There are 2 types of stocks. The first one is the common stocks. The second one is the preferred stocks. And if you own one of these, you will receive dividends or share of earnings of the company. What is a common stock? It is the type of people purchase. Most people purchase. It represents ownership of company and claim on part of the profits. Investors get 1 vote per stocks, while preferred stock don't have the same voting rights, but investors are usually guaranteed a fixed dividend. If the company is liquidated, they are paid off first. So what is dividend? It is a share in the company's profit. And to find for dividend per share. So what is a dividend per share? It is a ratio of the dividends to the number of shares, that is, dividend per share is the annual dividend divided by the number of shares. So where to buy? Stock through stock market. Stock market is a place where stocks can be bought or sold. The stock market in the Philippines is governed by the Philippine Stock Exchange, or the PSE. So what is market value? It is the current price of a stock at which it can be sold. Stock yield ratio is the ratio of the annual dividend per share and the market value per share, also called current stock yield. That is, the dividend yield is the annual dividend per share divided by the current stock price times 100. For example, a certain financial institution declared a 30 million dividend for the common stocks. If there are a total of 700,000 shares of common stock, how much is the dividend per share? Given we have the total dividend is 30 million pesos, total shares is 700,000. To find for the dividend per share, we're going to divide total dividend by total shares, wherein the total dividend is 30 million and the total shares is 700,000, which is equal to 42.86. Therefore, the dividend per share is 42 pesos and 86 centavos. So you're going to multiply that to the number of your shares. Another example, a certain corporation declared a 3% dividend on a stock with a par value of 500 pesos. Mrs. Lingan owns 200 shares of stock with par value of 500 pesos. How much is the dividend she received? So given, we have the dividend percentage, which is 3%, par value is 500, number of shares is 200. So to find for the dividend, that is the dividend per share is 500 times rate 0.03, which is equal to 15 pesos. But since there are 200 shares, so the total dividend is 15 pesos times the number of shares, which is 200, is equal to 3,000 pesos. Or to find for the dividend, we're going to multiply the dividend per share, which is 0.03 times the par value, which is 500 pesos, times the number of shares, which is 200. So we have 3,000 pesos is the dividend of Mrs. Lingan. Now, if you are interested to buy stocks for the future or in the future, this is the steps how to buy stocks. The first ones, do research about stock market brokers. Second, apply for a demo account at your chosen broker. Third, always invest that money which you don't need in the short term. Then fourth, apply fundamental analysis on stocks of interest. Fifth, place an order and select the number of stocks you want to buy. Then sixth, you are an investor now. Try to build a portfolio over time and review it every month to monitor your shares in that company. Now, have you ever thought that you could fund a big companies or even the government? Yes, this is also possible through bonds. Bonds are interest-bearing security which promises to pay amount of money on a certain maturity date, as stated in the bond certificate. So, if you have this bond now, you are a bond holders. A bond holders is a person owning a bond or bonds issued by a government or public company. It is an investor or owner of debt securities that are typically issued by a corporations and government. Unlike the stockholders, bondholders are lenders to the institution, which may be a government or private company. So some bond issuers are the national government, government agencies, government-owned and controlled corporation, non-bank corporation, or banks, and multilateral agencies. So if you are a bank holder, you will be given a coupon. A coupon is a periodic interest payment that the bank holder receives during the time between purchase date and maturity date, usually received semi-annually. So coupon rate is the rate per coupon payment period denoted by R. That is, a coupon rate is equal to the annual interest payment divided by the par value of bond times 100. Then the price of a bond is the price of the bond at purchase time denoted by P. And the par value and face value is the amount payable on the maturity date denoted by F. That if the price of the bond is equal to the face value, the bond is purchased at par. If the price of the bond is less than the face value, the bond is purchased at a discount. And if the price of the bond is greater than the face value, the bond is purchased at premium. So where to sell and buy again? Through bond market. It is where investors go to buy and sell debt securities issued by corporation or governments. So we have here the term of a bond is a fixed period of time in years at which the bond is redeemable as stated in the bond certificate, number of years from time of purchase to maturity date. And the fair price of bond is the present value of all cash inflows to the bond holders. For example, determine the amount of semi-annual coupon for a bond with a face value of 300,000 pesos that pays 10% payable semi-annually for its coupons. So given we have the face value F is 300,000 and the coupon rate R is 10%. So find the amount of semi-annual coupon that is 300,000 times 10% or 0.10, that is equal to 30,000. So the semi-annual coupon amount is 30,000 times, since that is semi-annually, so that is times 1/2, that is equal to 15,000 pesos. So therefore, the amount of semi-annual coupon that you're going to receive is 15,000 pesos. The coupon rate is used only for computing the coupon amount, usually paid semi-annually. It is not the rate at which money grows. Instead, current market conditions are reflected by the market rate and is used to compute the present value of future payments. Now, how we're going to distinguish stocks between stocks and bonds? Stocks is a form of equity financing or raising money by allowing investors to be part owners of the company, while bonds is a form of debt financing or raising money by borrowing from investors. Stocks prices vary every day. These prices are reported in various media like newspaper, TV, internet, and etc. While bond investors are guaranteed interest payment and return of their money at the maturity date. Stocks investors can earn if the stock prices increase, but they can lose money if the stocks because prices decrease, or worse, if the funding company goes bankrupt. While bond investor still needs to consider borrower's credit rating, bonds issued by the government pose less risk than those by companies because the government has guaranteed funded taxes from which it can pay its loans. So therefore, stocks high risk but with possibility of higher returns, and bond is a lower risk but lower yield. For stocks can be appropriate if the investment is for the long term, 10 years or more. For bonds can be appropriate for retirees because of the guaranteed fixed income or those who need the money soon. So we have here the stock index table wherein we have the index, the value, the change, and the percent of change. Val means the value of the index. CHG means change of the index value for the previous trading, that is the value today minus the value yesterday. Then the percent of change, the ratio of change to value, example, change divided by the value. And for the stock tables, we have for the 52-week, high-low, stock, dividend, volume, close, and net change. 52-week high-low means highest lowest selling price of the stock in the past 52 days, and high-low means highest lowest selling price in the last trading day. And div means dividend per share, and volume per hundreds means the number of shares in hundreds traded in the last trading day. In this case, stock AAA or AAA sold 2,050 shares of 100, which is equal to 20,500 shares. And close means closing price on the last trading day. And net change means net change between the two last trading days. In this case of AAA, the net change is 0.10. The closing price the day before the last trading day is 57.29 less 0.10, so that is 57 pesos and 19 centavos. For buying or selling stocks, so we have here the table for bid, size, and price as offer, price, and size. For bid size, that is the number of individual buy orders and the total number of shares they wish to buy. And bid price is the price the buyers are willing to pay for the stock. And ask price is the price the sellers of the stocks are willing to sell the stock. And ask size, how many individual sell orders have been placed in the online platform and the number of shares this seller wish to sell. So to buy or sell stocks, one may go to the PSE personally. However, most transactions nowadays are done by making a phone call to a registered broker or by logging onto a reputable online trading platform. Those with accounts in online trading platforms may often encounter a table with this kind of table. And for stock indices are reported the business section of the magazine or newspaper as well as online. So for your activity, 1. Match each item in column A with its definition in column B. Write your answer on the blank provided before the number. That is from number 1 to 8. And for activity 2, A. Identify the components in the stock certificate below. Write your answer on the blank. That is from number 1 to 5. And for letter B is number 6 to 10. And for activity 3, use the stock tables below to answer the succeeding questions. So we have 2 tables. And for example of this, so we have a table for 52-week high and long. So what were the high and low prices for a share for the past 52 days? That is under the first table, that is 75.5, and second column is 68.9. What were the high and low prices for a share yesterday? So that is for the fifth column which is 72, and the sixth column which is 69.2 under the high and low yesterday. Then for 3, give the price of which share fared when the stock exchange closed yesterday. So under close, that is 72. And for activity 4, find the investment by completing the table. The brokerage fee is 120 for each bond if 10 bonds are purchased, 80 pesos for each bond if 11 250 are purchased, and 60 for each bond if 61 or more bond are purchased. So this is from number 1 to 5 is the brokerage fee. For 6 to 10, we have the investment. So an example of this is we have the number of bonds held is 15, then the market value per bond is 3,000. So how we're going to find the brokerage fee? Remember that it says that the brokerage fee is 80 pesos for each bond if 11 to 50 are purchased. Since 15 is under 11 to 50, so we're going to use 80 pesos. So the brokerage fee will be 15, which is the number of bonds, times 80 pesos. So that's equal to 1,200 pesos. And for the investment, we're going to multiply the number of bonds times the market value, which is 3,000. So that's equal to 4,500 pesos. Then we're going now to add the brokerage fee, which is 1,200. So we have now the investment is 46,200 pesos. And before we end this lesson, let me share this quotation according to Bill Gross. Both from the standpoint of stocks and bonds, an investor wants to go where the growth is. Remember that there are 2 ways to make money in our modern world. The first way is to earn money from income by working by yourself. And the other way is to grow your fortune, is to invest your assets so that it will increase its value over time. And you can invest that in a certain corporation, organization, or company with a high possibility to gain profit. Again, this is Teacher Riza, always saying stay safe and stay healthy. Please don't forget to like and subscribe. Thank you. Have a nice day.